Welcome back. You're still tuned in to Markets Today on CNBC-TV18. Let's get to all of the rest of the headlines that we're tracking for you. Well, on to the fourth headline today then. Sona BLW Precision fell over 4%. This is after Blackstone sold about 14% of its 34% stake in the company via a block deal. The partial stake sale leaves the option of more sell downs in the future. Sonia Shenoy is here with the details on this story.
Well, thanks a lot for that. It's a rather large deal that took place on the exchanges today with Sona BLW, where, as you rightly pointed out, 10.2 crore shares, which is 17.2% equity, changed hands in just one deal, worth 5,200 crores. Now, this happened at a price of 510 rupees, which is lower than the current market price, and hence you're seeing the stock gravitate towards that level. Now, sources have told us that Blackstone is likely to have sold 13.6% stake out of the 17.2% total deal that happened. Blackstone was in any case looking to raise money. They have in all likelihood raised a little over 3,500 crores through this block deal. Blackstone held about 34.1% stake as of June 2022. So a large deal is what has taken place in Sona BLW today.
Okay, all right, Sonia, thanks very much for that. Well, in more news from the auto space, auto sector is preparing itself for the festive season already as more and more automakers line up their new offerings. In case of Maruti Suzuki's new launch, Grand Vitara, it has already received a very strong response. The company has crossed 40,000 bookings in just 30 days. Shashank Srivastava, the Senior Executive Director, Marketing and Sales at Maruti, says every segment at this point is competitive.
Well, as far as the pricing of Grand Vitara is concerned, we'll start the sales sometime in September. The production starts in the last week of August. So that's the time when we'll announce the prices. Regarding the competition in this segment, actually now every segment except the lower end, the smaller hatches, every segment is very, very competitive. And the importance of this mid SUV segment where the Grand Vitara is positioned is really important for Maruti Suzuki, because that's a segment which is almost 18% of the market, and our presence there has not been there. As far as the total bookings are concerned, yesterday we crossed the 40,000 numbers.
Okay, well, let's move on to earnings then. JBM Auto shares were up close to 2% in today's trade. The company reported what was a good set of Q1 numbers. For Q1, with a strong revenue growth, the company's EBITDA and profit also saw a rise on a year-on-year basis. Nishant Arya, who is the VC and MD of the company, says that there is no slowdown in EV buses. Listen in.
No, we are not seeing any slowdown in EV buses. It's just that most of the customers always generally end up taking more deliveries in H2, second half of the year. So it is that is why we see YOY performance. That's why we end up seeing that almost all the customers are taking more delivery of buses and realizing their annual budgets in the last 2 quarters of the year.
Okay, so that is on JBM Auto, but on to the fifth story today. It's a bitter pill for pharma companies. After that, the index fell around 0.5% post a sell-off in what we saw in US generic stocks following what was a dispute settlement over ranitidine, which is a high-risk drug. That's not all. The US President Biden is signing a law to rein in prices of prescription drugs, which also hurt sentiment. So as you can see, the Nifty Pharma index was down around 0.3%. Nonetheless, it was also the fact that a lot of the companies such as Sun, Dr. Reddy's, were a part of the settlement process when it came to ranitidine. So that was actually one of the key issues which the markets did face with. Now, it seems as though there could be more issues to deal with in the future, because this particular drug has multiple lawsuits by people claiming that this particular drug has eventually caused cancer to the people who have consumed it. So whether or not there will be a litigation going forward for the companies and whether or not they would have to pay a penalty, that is basically the point of concern. Not to mention that separately, there is also US price pressure to reckon with in the US markets, which the street is anticipating could be further augmented because of the steps which are actually taken by the US government. So the recent signing of the bill by the US president actually hasn't really impacted drug prices directly for generic companies, but the whole tone has been to reduce generic drug prices, and hence that could continue to weigh on generic drug manufacturers. But let's move on then. Wipro traded flat in today's session. The company is expected to have held back variable pay for mid and senior rung executives. Money Control reports this is owing to lower operating margins and concerns over a US recession.
Well, this is what Money Control sources have picked up, so I'm just reporting on that. Now, Wipro has held back June quarter's flexible payout to mid and senior employees. This was a letter that Money Control accessed, which was written to the employees earlier this week, and the letter says that senior managers to C-suite employees, that's the higher end employees, will not receive any variable payout for in the month of June, while the associates will receive only 70% of their variable payout. So, this is not negative news, but bear in mind a couple of things. One, this comes on the back of 2 very good years in terms of wage hikes and increments for the IT sector. B, is this a Wipro-specific problem, or can we hear other IT companies? While Wipro's margin performance Q1 was stark, it was at a multi-quarter low, but even the rest of the IT pack reported some margin misses. So can we now expect IT companies to perhaps go slow on the wage hikes? But if they don't, then attrition will continue to remain a problem. For Wipro, the attrition is very high, and this development, if it doesn't become an industry-specific issue, could result in Wipro's attrition going up even higher. In the June quarter, Wipro's attrition was in excess of 23%. Back to you.
Okay, all right, Reema, thanks very much for that. Well, moving on, Jubilant Food is up around 9% this week. Mangala Malu is standing by with what's driving the stock and what lies ahead for it as well.
Well, Jubilant Foodworks was among the big gainers today. In fact, not just today, this week it's actually gained almost 9% and this month itself it's gained almost 14%. The inkling is that our FII is buying this stock because back in the day it was an erstwhile FII favorite. In September 2021, before the FIs actually started selling in the Indian markets, they held about 41% stake in Jubilant Foodworks, and then their stake kept coming down almost sub 40% in the December quarter. Thereafter it was closer to 30% in the March quarter, and in June it fell below that 30% as well, in line with the way we saw a sell-off by the FIIs. But the stock, remember, has corrected about 32% from its 52-week high. Over the last few trading sessions, over the last 13 trading sessions, the FIIs have come back to the Indian markets and they've put 20,000 crores plus in just the last 13 trading sessions. So the belief is, are they putting their money back from where they had taken it out earlier or not? And is that what explains the kind of up move that we're seeing on Jubilant Foodworks? So that is something that we will monitor closely. But apart from that, we do have another bunch of triggers for them. The first one, of course, is that in the first quarter, their revenues as well as EBITDA jumped by almost 30% plus as compared to pre-pandemic levels. So consumer sentiment is rather strong, and this despite the inflation that we're seeing. And apart from that, and that brings me to my second point, inflation too has begun to cool off. So that is something that should aid their margins going forward. The company has appointed Samir Khetarpal as the MD and CEO with effect from 5 years. A couple of quarters ago, the announcement did come by. So that takes away the overhang of the leadership of the company as well. And finally, the most important thing, valuations from the peak of 75 times, they're now trading mid-50s in terms of 1 year forward price to earnings. So maybe that is a bit more palatable to the FII investors who may be buying Jubilant Foodworks.
Okay, all right, Mangalam, thanks very much for that. Well, let's move on to the big newsmaker this evening. The global CEO of Mastercard, Michael Maybach, is bullish on India. In fact, he believes India can become the largest digital economy in the world. He spoke to Shireen Ban about what he makes of India as a market and Mastercard's plans to bolster growth.
What I see today, particularly through the lens of our business, when we look at the digital economy and how it's growing in India and the growth rates of UPI and so forth, there is technology put to work at scale in unprecedented ways in India. And as a tech company and as a tech geek, I find that hugely exciting. So I'm going to go back and see there's models emerging in India that we should all think about and see what else we can do and how we evolve our business in partnerships with fintechs and other companies that are using this technology here in India.
From your strategy of buy, build or sort of partner, where does India fit into that strategy currently, and what is it going to mean in terms of future investments?
So let me just say a few things. We're not a credit card company to start with, so let's just...
that transition you've been on for the last couple of years.
Let's just baseline on that. So as a payment technology company, we kind of broadly speaking, what we do, our strategy is be in payments, whatever choice of payments is there. Like India is offering a lot more choice in payments than was there even 5 years ago. So it might have been cards, and now it's UPI, it's account-to-account, it's push payments. You want it, you have it in India. So we want to offer solutions in all those spaces. That's our stated strategy. It's different in different countries, and here in India, certainly there's more choice and bit there for that. But then that's also the question. So if you have that rapidly rising digital economy with all these different payment choices for people, how do you keep it safe? How do you keep it simple? That's another part of our strategy, where we say every kind of service that makes this simple, address the cyber risks, is your digital identity compromised, all those kind of things we take care of, and we then partner. And that comes to the partnership point. We say, on payments, there's a lot of partnerships required, for example, on nascent areas of payments, B2B payments. There's a lot of inefficiency in B2B payments, which we bring solutions to the party. Basic P2P payments, here in India, UPIs are an amazing success. We don't really need to partner on that, but the question on cybersecurity and how do you make sure that these payments remain safe as this becomes one of the, if not the largest digital economy in the world, that's a partnership area. Then you go into some of the big questions that India is addressing that many other countries will face, and that's the question of an inclusive digital economy. Hundreds of millions of people. We think there's going to be 100 million people that join the formal digital economy in India in the next couple of years.
Okay, well, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.